Hi everyone. We are going to look at another VBA application. This is a new one that we have designed to calculate the beta of a company's stock. So this is an application that demonstrates a few new skills. Here are the primary learning objectives. Number one, we're going to learn how to capture data from an API. So you will see what an API is and how we can get data from the website automatically. You will also learn how to use a list box on a user form. And then conceptually, we're going to learn, we're going to see how VBA can automate the process of using nonlinear optimization to estimate the beta of a stock with different optimization criteria using Solver. So this example assumes that you have some background knowledge of linear regression, optimization, and Solver. And of course, what beta is and sort of basic sort of finance knowledge. Okay, we'll go through the basics of the mathematics, but the focus is going to be primarily on VBA. So details of the application is available on the explanation tab. So if you come over here, you'll be able to see some definitions and clarifications and instructions. And then we'll come over here, the button is over here, and you can click the button to run the program. I'm gonna get out of the design mode. Okay, so this is an application for estimating stock betas. The beta of a stock is a measure of how a stock's price changes as a market index changes. So you're looking at the relationship between a stock's price and a market index like S&P 500 or NASDAQ. Okay, it's a measure of correlative volatility relative to a benchmark, usually a market index, right? So we're using any kind of market index. In this particular case, we're using S&P 500, but you could switch to Dow Jones or anything else that you want. It's the coefficient of the market return when the returns of the stock are regressed on the market returns. Okay, so you're really looking at the relationship between the two. So if you come over here to look at the equation, so y is stock return, x is market return, and we're really looking at the linear relationship between the two. Now, if you're familiar with regression, linear regression, you will see that this is just the regression equation. So we're using stock return as the y or dependent variable and market return as the independent variable, x over here. These are data series. And then beta is just the beta coefficient, just like how we estimate a regression coefficient for a variable. So that is actually the beta that we see commonly in financial information. Okay, this is the alpha, which is the intercept, and in finance, this is called the alpha term. So the focus of this application is to estimate beta because beta is a very important piece of information for evaluating a company's stock. When beta is greater than 1, the stock is relatively volatile, meaning that it's more volatile. It changes, the price changes by a larger percentage relative to the market. Okay, so it's more volatile than the market. When beta is less than 1, that means the stock is less volatile than the market. In other words, the stock's price changes by a smaller percentage than the market does. This application uses daily stock returns from Alpha Vantage. So it's a company that provides an API that's basically a data feed that you can get real-time data from. So we'll use their API to download the data and to find a company's beta. So if you want to learn more about the API, here's the link to the company. You can click on it, and this will take you to the API documentation. You can read about it. I have a link to this site from our course website right here. If we go to week 11, we'll be able to see a link right here, Alpha Vantage API documentation. So it's pretty dense, but it's got very thorough documentation. And if you're interested in looking at different, changing the parameters, you can actually mess around and use any of this information for your own stock analysis. So it's very, very useful. And the code that we're going to review will show you exactly how to do this automatically, right? So this is a real-time automated download of data. The beta of the stock can be estimated for any of the companies in Alpha Vantage's listings and will be based on the most recent 100 trading days, using one of 4 possible criteria for finding the best fitting regression equation. The application requires that, this line is no longer true, so I'll just delete this. Okay, the user can choose any of the companies on the user form list box. So you will, once you click this, you'll get a user form that asks for your input. You will have to make 2 decisions. You have to pick a company, and then you have to pick an optimization criteria. So this requires some understanding of what sum of squares, weighted sum of squares, again, another typo, I apologize for that. Sum of squares, sum of absolute errors, or minimax, which is to minimize the maximum absolute error. Okay, so you have these options. And we're not going to spend a lot of time talking about what these are. So if you're interested, you can look them up. I can also provide some links on this. I think there is an article that I have posted on beta, the definition of beta, so you can read about it on Wikipedia. These different sort of equations really require some review of what you've learned from the data analysis course and the optimization course. The application calculates beta based on the user's input. And by the way, if a company does not appear in the provided list, it may be added in the hidden sheet called tickers. So there's a bunch of, right now you see only 2 sheets, but you can actually see the model, S&P, and the stock market. So this is ABR. It's a company's abbreviation, the ticker symbol. This company, this sheet will change depending on what company you choose. And then tickers is another sheet that's hidden. You can edit this tickers sheet to add any company that you want to do. Okay, so to do so, you must know which exchange the company is listed on. Okay, so this is a list of sheets that will appear when we start to run the program. Okay, so this is the model. I just actually unhid it. So that is all. So this is sort of an overview of the program. The idea is to get beta. So I encourage you to learn a little bit about what beta is. I assume you've learned about this from your finance class. And a little bit of review on the different optimization criteria, a little bit of review of what regression is. And then you'll be ready to find beta. So let's click this button and see what it does. So once you click find beta, you can see a drop-down list of the different exchanges, stock exchanges, New York Stock Exchange, NASDAQ, and Amex. And from these different stock exchanges, you can you will have a list of company names, and then you can choose any of them. So for example, I can choose, say, choose anything, right? So maybe Thomas Equipment. Okay, and then I can use one of these 4 estimation methods or optimization criteria. So I can use sum of square errors, weighted sum of square errors, and you can specify a weighting constant, sum of absolute errors, and minimax. Okay, so if I choose this and I click OK, the model will run. So you will see it's running the model. It's actually running the query for the beta. The beta for this period is 0.169. Click another another question button to repeat with different options. Okay. So we have now generated the beta model, so you can actually see the market return, the stock return, and then these are the different beta coefficients using different estimation methods. Okay. So you can see the alpha, you can see the beta over here. Okay, so this is the beta that we're looking for. And this is a number that got minimized. We did not specify a weighted constant. And the method that we used is sum of absolute errors. And you can see the equation over here. If you want to do another one, you can always choose the same method using a different, same stock using a different estimation method, and the model will run again. And if you want to see what the data sets are, so this is the S&P data set. So this is, you can see this is as of today, April 20th, pretty up to date, and gets data from the last 100 days. This is THM as Thomas Equipment, which is the company that I chose, right? So this is, again, the stock market data from the last 100 days. The tickers is the list of companies, right? So the drop-down menu that we saw, the NASDAQ, NYSE, and MX, the list of companies and their ticket symbols is summarized over here. Now, if you want to, so we selected Thomas Equipment. So this value will change depending on the user choice. You do need to, you can edit this list, right? So you can add more companies over here, but you just have to know which stock exchange it is on, and also you need to know the ticker symbol, and the information has to be correct, and then the API will automatically feed you the data as long as you have the correct ticker information. Okay, so we can try another company. So I want to show you that this THM is really Thomas Equipment. This will change depending on what company I choose. So if I choose another company, say if we go back to New York Stock Exchange, if I choose Alcoa, I'm from Pittsburgh, so I'm always a big Alcoa fan. I can choose this, and then you'll see that ticker symbol will change to Alcoa, which is AA. Okay. So the model is running, updating everything, and now you can see we are getting the beta for AA. So the company is AA. I don't see the company ticker symbol on this sheet right now. Oh, here it is. Estimation model for Alcoa, right? So this name gets updated, and you can see that this worksheet is updated with the ticker symbol for Alcoa, AA, and also this is sort of fresh stock market data for AA. Right, so that is all. It's a very high-level overview of the program, and I encourage you to play around, look at different features, try different parameters, play with it, and play with the API. Check out the documentation, learn as much as you can. Look at the code, right? See if you can figure it out. And then on Wednesday, we'll have a walkthrough of the code. I believe all the code is behind explanation, the worksheet over here. All right. Well, have fun.